Okay. Okay, well, we'll go ahead and get started. Again, my name is Mark Taylor. I'll be teaching the class, and I sent out in the email the stuff for today's class. And usually I'll also send that out. It'll also be posted in Blackboard. And let me show you what I mean by that. Oops, that's not what I mean by that. And neither is that. If you go into Blackboard, hopefully in Blackboard you have something that looks like this. And you'll see some things on the side here. We have Zoom meeting. That's just this. But if you're watching this, you already figured this one out. And then I'll have recorded Zoom meetings. Now, obviously, today will be the first one we record, so this will be the first one that we put in there. It takes about a day for it to get posted. Oftentimes it'll be sooner than that, but yeah, and the reason being is that once the class is recorded, it's then rendered, and then I go in and edit out, some of the just to make it more watchable, edit out some of the stuff, and then it renders again, and then I post it in YouTube, and YouTube, of course, renders it again. So you get these kind of delays. And the big problem there is the YouTube one, because the YouTube rendering can take 10 minutes or it can take 10 hours. You never really know what's going to happen with it. Okay, but under class handouts, these are the same handouts that get emailed to you guys. So if you're looking for the handouts, ebook there, if you had the ebook. If you didn't get the ebook, that's fine. We'll talk about it in a minute here. Syllabus, blah, 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 instructor information. Yeah, and feel free to contact me. My email address is for Roosevelt is mtaylor49, but my personal one's on there too. If this one isn't working, sometimes it doesn't. If you're worried that maybe your email isn't getting through, you can go ahead and send it to this one. You can send it to both of them too. Yeah, that's not an idea. So anyway, that is the Blackboard. But let's go to the syllabus. And okay, so syllabus. My contact information is down there. These dates are wrong. Man, goof this whole thing up. Figure it out. The dates are 8/30 through 12-18. Sorry about that. My office hours, I can do meetings almost any time. I usually have office hours planned for Friday. I'll be absolutely honest with you. I've never had a student show up to those. But if you need to make a, if you want to have a meeting, we can go ahead and do that. Let me know, and I'm usually available almost any time. The only times I'm not available are obviously for our class time, and then also for Tuesday, Thursday, I have 6 p.m. classes. But other than that, okay. Textbook and materials, 15th edition, Sungage. You can probably get this used. You don't need to have the online for my class, anyways. You don't need to have the online materials. You can turn stuff in by hand, and we don't use it. The textbook is not the entire class. I know in some classes they have a canned class, and I could do that. It makes it real easy on the teacher. You don't have to do anything, but it's just not a real. I don't. To me, it's not a great way of teaching. But anyway, and in students, the failure rate is usually pretty high on those. So anyway, the textbook though, you can probably pick it up used, or you maybe get it cheaper in a PDF files online. but the textbook is 15th edition, and we will use it some for the problems in the book. Some of the text problems we'll go through, but again, is not the entire course. So it isn't that you. And now, having said that, this book is for 2 courses. It's for Accounting 210 and Accounting 211. The reason I'm saying that is if you have a different instructor who maybe relies more heavily on the textbook, they may require you to have the access code. You know, so this access code you may need for if you take it for an archive. So that's the only caveat I'll give you on that. Okay, prerequisites, blah, blah, blah. Objectives. Blah, blah, blah. Okay. This is on page 2. Okay, the handouts, the stuff we do in class, the handouts, textbook problems, and practice exams are 20% of the grade. And the exams are 80% of the grade. The reason I say that, maybe to emphasize that, is you can turn in a lot of stuff, but if you don't turn in the exams, your grade's gonna look bad. So the exams are key to get those in. Okay. I already talked about this a little bit. Zoom meetings. Zoom meetings are recorded and they're posted, and there's a link in Blackboard that'll go to YouTube. Okay. We talk about course files. Okay. So this is kind of submit handouts and exams to be graded. And a lot of times students will ask, well, you know, what's due? What am I actually supposed to be doing here? What are you supposed to do? Okay, basically we will go over the handouts and the practice exam and some of the text problems. We'll do that in the Zoom meeting in class. Those will be recorded. Once you're done with those, you will submit them, and not to there. Oh, I don't have it on here. I gotta get out of this mode. The reason that the reason this isn't showing is that there's nothing in it right now. But you'll have a place to put it called submit handouts and exams to be graded. This is where you submit your work. And this will also be where you look for what needs to be turned in, because it'll have, the first thing we're going to turn in is chapter 1 handout. So the chapter 1 handout would be in there. Probably next class it'll be in there to turn it in. But submit handouts and exams be great. This is where you actually submit things, and this is where you'd also find what needs to be submitted. So, all right, let's go back, and we'll do that together next class. Okay, so for each chapter, there's usually 4 things. Handout, tip to the book. There's a practice exam, which you get extra credit points on. We'll talk about that later. And then there is the exam, and the exam is emailed to you. The exam is not in the course files, and you say, why? Because there's different versions of the exam. So some people may have, you know, version A, B, C, D, whatever it is. And so those are email. Okay, about the assignments. Let's use a different color here. How about green? All assignments have unlimited attempts. Okay, so you can put as many attempts in the assignments. And so if you submit something and you say, okay, I didn't do that right, or I submitted the wrong thing, don't worry about it. It's unlimited. You can submit another one. Also, you can submit multiple files at the same time. So, and we'll get that when we turn the problems here in a second. So anyway, it's unlimited. Now, I also take late work too. So if you miss, you know, so if there's something that's due and you miss with the due date, you can still get full credit for it. Your grade's going to look bad until you turn it in, but you can still get full credit for it. So while the due dates are there, and the due dates are when it's going to show up in your grades, it doesn't mean you missed out on those points. It just means that you have to get it in. So for instance, you don't turn the chapter 1 exam in by the due date, your grade's going to look terrible because exams are 80% of the grade. However, when you turn it in, then it'll get updated. So keep that in mind, that it's not a all or nothing thing. Okay. Acceptable forms. Yeah, let's try a different one. What's this? There we go. Let's try that again. Filled in Word document. This is what most people do. They fill in the Word document. It's usually it can be the easiest, but not always. But that's what most people do. They fill in the document and then return it. And when you return it, you just put it. You don't have to change the title or name or anything like that. You can just post it into submit it in Blackboard. So this is what you'll be submitting in Blackboard, will be that file. Now, you don't have to do that though. If you want to print the document, so you want, let's say, no, I like to print it out, I like to have it in front of me, you do it by hand, absolutely fine. And that's actually a really good way to learn too, print it out. But if you print out the document, do it by hand, scan into a PDF file. That's fine too, right? So there were up to 2 ways to turn it in. Another way is the hand picture is submitted for each page. So you can also, you print out the exam, you can take pictures of each page and send in the pictures. Now, I know you say, okay, well, I'll just zip those and put them all into one file. Blackboard can't process that. It really makes a headache. If you just leave them, you don't have to zip them. Just take a picture, submit the pictures. If you have 10 pictures, that's fine. Remember, there's unlimited attempts and unlimited, submittals. So 10 pages, 10 pictures, submit it, it's fine. If you don't want to print them out and you don't want to do it, you can also just do it on a notebook paper. Yeah. Nothing wrong with that either. So just get a piece of notebook paper or copy, whatever kind of paper you want to use, and then just take pictures of it. So you can really submit it almost any way you can think of. A couple of things. The Blackboard app, for some odd reason, doesn't work well with the Apple stuff. Apple's probably the most popular phone in the world, or a good chunk of the market, but for whatever reason, it doesn't work very well. And so sometimes for the smartphones, the Blackboard app is not very reliable. And just, and that's not just for that isn't just for this class, it's for all the classes. So if you're having trouble with class submitting stuff, the app is, it's not as reliable as doing it on the PC. Okay, or in regular computers. Okay, so Apple or PC. Okay, if you are an Apple user, Blackboard cannot process page files. And page files takes a conversion, and it really it slows things up. So if you're doing this in if you're using an Apple phone or whatever iPad, just leave it in the pictures. Don't put them all together. A page file is basically a zip file for those. It's the Apple's version of a zip file. So don't do that. Just submit the pictures. Or if you want to, if you're doing it, if it automatically goes into the page file, you can also convert it into a PDF. And the PDF is fine. So if you convert them into the PDF, that's actually ideal. But if you can't, or just put it into submit the individual pictures is fine too. Okay, grade for the class. We talked about this already. These are the chapters we'll be covering. This could change during the semester, just so you know. It's It's hard, and these are not written in stone. They could change. The one that you'll notice immediately that's a little bit odd is that chapter 4 comes before chapter 3. And there's a reason for that, which we'll talk about later, but it's basically, it seems to flow a little bit better if we do chapter 4 before chapter 3. That's not usually the way the chapters work. They usually build on each other. But so we're going to do chapter 4 before chapter 3. Okay. And then this is just all boilerplate stuff that you'll see on all of the. Okay. Any questions on that? Any question? And by the way, if you have any question, if you
I actually have a question.
Yeah.
So you said we could turn things in to you as a hard copy.
Well, if you just if you do it, if you just take a picture of it. Yeah.
Oh, I'm sorry about that. My bad.
No. Yeah. So if you just take a picture of it, you can scan it. Most people don't have scanners though, but if you just take a picture of it and submit the pictures, and again, you know, if there's 5 pictures, there's 5 pictures. You can submit all of them. So.
All right.
Yeah, and again, I take it pretty much. You know, the only thing that really slows things up is if they're submitted in zip files or in page files, and I usually grade those last because I put them all into a folder. Then I have to go through and unzip them and so on and so forth. But the rest of them are, you know, if you submit it in PDF or in the same file form or in pictures, those are absolutely fine.
Okay, thank you.
I have a quick question as well.
Yeah.
So you said that we can submit like assignments or whatever as many times as we need to. Does that count for quizzes too, or just like the assignments that we send?
You can't do it for the tests.
Okay.
Yeah, but now usually the tests though the tests pretty much follow the practice exam.
Okay.
So you know, usually if you can do the practice exam, you can do the exam fairly well. And also remember that you are doing the exams. You know, you have all your resources available.
Okay.
So. But yeah, there are unlimited attempts. You're right. I should clarify that the unlimited attempts are for the homework. Now, if you, I have had this happen that students have submitted the wrong exam into a spot, and in those cases, I've let them put the right exam in, basically. So, well, I do say that you know you can't do it. If you do make a mistake submitting it, don't worry, it's not the end of the world. It's just, you know, that's we can work that out. That's a very rare thing to happen. Okay. Well, I think what we'll do now, we're almost out of time. Well, we'll get started a little bit here. We'll start on some of the stuff here. So just to kind of get you familiar with kind of a little bit of going through what we're going to cover, I'm going to pull up the chapter 1 handout. I'm going to sit there with a dopey look on my face until I pull it up. But, okay, so this is the chapter 1 handout, and we'll go through some of this here. And we won't finish this one today, but we'll go through some of it. So this is the chapter 1 handout, and again, and so this is going to get turned in, just so you know. And you know, as far as the notes you put on there, that's fine. There are actual problems that we're going to be doing. If you kind of page down here, you'll see the problems we're going to be doing. Those are what you're going to submit. But we're going to go through some of the stuff that's kind of general information up here at the top. But this is what you're going to turn in, and you can do it right in the document itself, which I'm going to do. I used to do it by hand, but my handwriting was so bad I would get too many questions on it. So anyway, I'll be typing it right into the document. It's usually just easier for people to follow. But you can do it by hand. You can write it in a notebook. You can print it out, do it that way. However you turn it in is fine with me. Okay, so what we're gonna do is start in on chapter 1. And the first thing we're gonna talk about are corporations. You guys may have had this in other classes. If you're in a business class or something like that, you probably have already had this. But we're gonna go over it just because it relates to what we're gonna be doing for the rest of the quarter. So be good to kind of have a little bit of background on corporation. Okay, the first one, and this is probably the most important thing about corporations, they're a legal entity and they're completely separate from the owners. So the owners are not the business. So if you own IBM stock, that doesn't mean you're IBM. Right. So it's completely separate from the individual. In fact, what happens is, I'll get to this a little bit later. I just got a message. The students can now see my screen, or participants can now see my screen. Was I blank here for a while? Anyway.
Now we can.
No, you've been on.
Okay. All right. So it's completely separate from the owner. And this is granted by states. So this, I should probably put that up near the top, but the states grant the right to be a corporation. It's basically making a fictitious person. A corporation has all of the powers that you have, except for voting. They can sue and be sued. They can enter contracts. They can buy property. They can own property. They can do it. They're not people. It's a fictitious person, but they can do basically most things that a regular person can do. And so this separates out the business, the corporation from the owners. So the owners and corporations are two completely separate entities. And as a matter of fact, the corporations can sue the owners if they want. I mean, they're that separate. If they, Now, you say, well, why would anyone want to do that? And the second one is the reason why. They have limited liability, and then in a corporation, you have a question? Okay. So in a corporation, the liability is limited to your investment. Whatever you invest in the company, that's what you can lose. If the company goes bankrupt, again, remember, they're separate from you. So it could be a company, IBM is probably not going to go bankrupt, but if I invested in IBM and it went bankrupt, that doesn't mean I'll go bankrupt. IBM's separate from me. I'll lose my investment, whatever I invested in IBM, I'll be gone. But it is separate from the owners. I talked about this as granted by the state. So these will be, the state of Illinois will grant, you fill out a form basically, and you can get a corporation. So any state you will have these. Back in the day, these used to be very hard to get. You'd have to have legislatures actually vote you a corporation. You have to go make your case before your state assemblies and stuff. So now it's just you fill out a form, but it's granted by the state. And by the way, the reason they did this is that, first of all, that anyone could, it opened up investment to a lot of different people who couldn't normally do that. And it also made for very large companies possible. And some companies have to be very large. Auto companies, they're generally very expensive to open up and all that kind of stuff. So how do they get money? Well, they have to have a lot of people invest in it. So a lot of these companies, a lot of these are for big businesses, very hard to get the money. But here's the great thing about that. What that means is I may not know anything about technology, nothing, but I can invest in a technology company and, make profits from that company. So, that's the beauty of it is you can invest in something you have no idea how it works, but you can invest in it, which is very different from in the past. Before corporations, if you want to do, be a blacksmith or whatever they did, you'd have to be a blacksmith. That's generally the idea behind it. But you can invest in anything, almost any market.
Can you have a limited liability without having a business license, or do they have to go hand in hand?
Different businesses will have business licensing, but the liability is tied to the corporation. So even if you have a business license, if you're a sole proprietor, if you're not incorporated, then you don't have limited liability. Yeah. So yeah, the corporation is limited liability, and just to kind of round it out, the other two types of businesses are sole proprietors. Oops. Or partnerships. If you're a sole proprietor, that's not how you spell sole proprietor. My camera's blocking my screen. So a sole proprietor is when there's one person in business. And a partnership is when there's more than one person in business. But these have unlimited liability. So if I'm a sole proprietor, I'm running my business, if I get sued, they can take everything the business has. They can also come take my cars and my house and my boats and whatever else I have. So you have unlimited liability if you're a sole proprietor partnership, which is why you have a lot of which is why sometimes you'll have even very small companies be corporations. So, you know, if I'm running a hot dog stand and if it's a sole proprietor and someone, I don't know, something bad happens and I get sued, if I'm a corporation, all they can get is my hot dog cart. If I'm not a corporation, they can come take everything. Yeah, so the liability is, it really follows the corporation. So and there's nothing wrong with having a hot dog stand that's incorporated. It happens all the time.
Is there an extra step you have to take to become like a corporation after you already like have a business? Say you like have a limited liability company with your license, with your business license. Is there another step that you have to take after that to become like a corporation?
Yeah. It's basically a form in most states that you fill out and pay a fee, and that you can become incorporated, and it'll say what's in the corporation and all that kind of stuff. But yeah, it's incorporating is very popular. There are some tax ramifications for it, and the type of corporation, most people, if you have a small business, what you would want to do is do what they call an S corporation, and an S corporation gets taxed like gets taxed less, basically. So let's write that in there somewhere. Here, so this is called, if you're a small business. Actually, it doesn't have to be really small, but if you have fewer than, I think, 35 owners, you can do what they call an S corporation. Oops. S corporation, it has to have, I have to look up the exact, it's been a while.
Oh, so sorry to keep cutting you off, but so basically in Chicago, to start a business, you'd get your limited liability, which you can do through any one of those like companies that offer an LLC, but then you'd also have to get your business license through the city, correct? And then you have to fill out a form doing that to get an S corporation.
An LLC is a limited liability company or corporation. Yeah, if it's already limited liability, then no. There are different forms of limited liability.
Okay.
Yeah, but if you're incorporated, though, an S corporation for your taxes is the one that you usually have. But yeah, and again, I don't want to get too far off track here. There are different forms of business. There are definitely different forms of business other than just plain old corporations. But but limited liability ones are basically the same, the same idea. So if you are a limited liability corporation or company, your liability is limited, usually to the investment. Yeah. So, okay. So articles of incorporation. So article of incorporation are the kind of the rules of a corporation. And the rules of a corporation are basically what the company has agreed to follow. These will be, you know, what they call the charter of it, that they will have the articles of incorporation. May have one owner or millions of owners. Yeah, you have the hot dog stand, probably have one owner. Your IBM, millions of owners. Privately or publicly traded. If I own a hot dog stand, you cannot buy my stock most likely. I mean, it takes a lot to get a stock listed as publicly traded. And there's nothing wrong with that. Now, you can, through other deals, you can sell your stock. You know, you can have 5, 6, you know, many owners. It just won't be publicly traded, it's privately traded. Anyone can buy IBM stock. If it's privately traded, you can pick and choose who buys your stock. So, you know, IBM can't stop me from buying your stock. If you're privately traded, you have a hot dog stand and say, I want to buy your, you know, you pick and choose who it is. Owners do not always participate in management. Obviously, if I buy IBM stock, they're not gonna, you know, I can't walk into IBM and start ordering people around, even though I'm an owner. They're completely separate individual. And that's, you know, and that's true of all corporations, you know, that they're completely separate. So just because you have ownership does not give you rights to, you know, walk into the place and all that kind of stuff. Dividends are paid to the owners, but only if dividends are declared by the corporation. So, and corporations are not required to pay dividends. So a corporation, if they declare dividends, then all the owners get paid. But it's possible they say, look, we had a bad year, we can't pay dividends. There's nothing wrong with that either. So if they do declare dividends, then the owners get paid. If they don't declare dividends, you don't get paid. Now, you gotta remember though, that these are the owners. So, you know, a lot of times, if you make the owners too mad, they're probably going to kick you out. So whoever's running the place. So anyway, generally, if a company can't pay dividends, a lot of times they will. But you know, that's basically up to the company themselves. Okay, privately held company. So let's say you're privately held. You own the stock. You know, it's not on the stock exchange or anything like that. Corporations may issue financial statements to the owners or others. It's possible your bank wants financial statements. They want to see how you're doing. And, you know, totally reasonable. An insurance company, you know, you get insurance on the place and they want to say, okay, well, how big is it? What kind of business are you in? All that kind of stuff. So privately held companies may issue financial statements, and a lot of times they will. And especially if they start getting larger, you know, start getting bank loans, things like that. They're going to want to see some financial statements. You want to see how well you're doing. Publicly held companies are listed on stock exchanges. And publicly held companies must issue financial statements to the public. So you're required, if you're a publicly traded company, you have to issue financial statements. And by the way, you can look up the financial statements of all publicly traded companies. You can get them from any publicly traded company, you can get their financial statements. If it's privately traded, or it's privately held, no. So if you want to look at my my hot dog stand financial statements, I can say, no, you know, these are only for certain people, myself or the bank or whoever. Okay, now all that business I just talked about, it kind of comes down to this. So the financial statements. So these are the financial statements that we're gonna have. The income statement, how much did you make? Yeah, basically, what was your profit for the place? The second one is, let's get my head on a thing here. The second one here is statement of owners of retained earnings. And the statement of retained earnings is kind of like the owner's piggy bank. How much is in the piggy bank? If the business makes money and you take money out, well, that money goes into a, sort of like a piggy bank. And so that's what the statement of retained earnings is, what's in the piggy bank. And the balance sheet is you have all this stuff, but it tells how you got it. So you drive by a Walmart, you see the building, you see the the parking lot, you see the merchandise inside and all that. The balance sheet tells how they got all that stuff. So it kind of lays out, how did you get this building, this merchandise, all that sort of thing. Statement of cash flows is somewhat important. Actually, it's very important, but we're not going to cover it in this class. And you say, why? At least not initially. It's very complex. And by the way, just to give you an idea, these first three financial statements have been around for about 400 years or more. So these have been around for a long time. This financial statement has been around for about 40 years. So this is kind of like the new one, and you'll still find accountants that hate this one because they, when they went through school, it didn't exist. But statement of cash flows, it's a good financial statement. It's just it's really complex. You really have to know a lot about these three to make one of these. So we're not covering this class, but it's out there. Okay, well, let's go ahead and get started. And so this is the first thing we're going to do is okay. So we're going to do the basic financial statements, and here's the whole idea behind financial statements. If you look at this list of, these are the accounts. If you look at this list of accounts, it's very difficult to just look at those accounts and make any sense out of it. I mean, like, okay, there's so much cash they have, equipment, have some of these other things, but it's very hard to make sense out of it just looking at a list of accounts. So one of the things that we do is make these financial statements, and oops. We're going to make the income statement, statement of retained earnings, and the balance sheet. So these are the three financial statements we're going to make out of these accounts. Okay. So income statement, statement of retained earnings, and balance sheet. And again, the whole purpose is to try to give people looking at it some kind of an idea what's going on. How's the place doing? If you show them this, hard to tell. So, okay. So coming down here to the income statement. Basically, if you want to see how much money you're actually making, on any given day, you'd probably compare the money that comes in with the money that goes out, right? How much did you take in, how much went out, and whatever's left over, that's how much money you made, right? So the actual concept is pretty easy. Now, we use different terms here. Revenues are used for the money that's coming in. So this is what's coming into the place. So revenue is kind of a special. Oh, look at all these. Let's make revenues. Okay, so revenues are coming in. So this is money coming in. Looking at these accounts, which ones do you think are the money going out?
Expenses.
Yep. Yep, exactly. These expenses are money going out. So. So this is what we're going to compare. And again, this is for any expense. You know, I know we have specific expenses here, but any expense. Money going out. So we're going to compare what came in, the revenues with what went out, and these are expenses. Again, any expenses, money going out. Okay, so coming out here. So our revenues. Is the money coming in? $4,000. And we're going to compare that to the money going out. So we paid rent expense, salary expense. There could be any expense, utilities expense, whatever it is. Any expense would be money going out. In this case, we have the two expenses. We have rent expense. And I'm going to put that in as a negative just so that we know that that's money going out. And salaries expense too. That is also money going out. Okay. Okay. So this is money coming in, this is money going out, and so we're going to subtract those. Whatever is left over, we get to keep. Okay, so I'm going to my calculator cam. If you have a computer, you can use a computer too. All right, so 54,000. Oops, that's not. Minus 600 minus 19,800. Oops, did that wrong. $24,600. So this is, oops, that's what's left over here. You may want to check that. I'll check in a second. But this is what we call our net income. So this is our net income, and this is how much we get to keep. Check this just to make sure I'm not putting something stupid up here.
Yeah, I got 19,800.
I got 24,600 as well.
I think it's 24,600. Oh, the 19,800 is the salaries expense. Yeah, I think this is it.
Yeah,
Yeah,
24.
sorry, I messed up. I messed it in.
All right, yeah. So this is how much money they made. This is how much money they get to keep. Now, sometimes you hear on the news or in business something, they'll talk about revenues. Oh, the revenues increased by 10%. The revenues increased, whatever, went down, whatever. Are revenues the most important number on here? No, I mean.
Oh, not really. I guess the most important will be the amount of money that we get to keep, so the net income.
Exactly. The net income is the important number. If you have 54,000 revenue, you go, oh, that's great. Well, if you have 55,000 expenses, that's not great. So even though a lot of times they focus on it, and the reason they focus on it, I think a lot of times is just because it's sensational. The biggest number on this thing will be the revenues. But a lot of times it's the net income is the most important number. Okay. So this tells how much they made for whatever the period is. So if this was a year or a month or a week or whatever it was, this is how much money they made. Okay, so let's go to the statement of retained earnings. Which account here do you think goes on the statement of retained earnings?
It says.
Or, yeah, the retained earnings.
Retained earnings. Okay, so this retained earnings, this is going to be our,
Excuse me?
yeah, so this will be,
Excuse me?
excuse me?
Yeah, so for the income statement, so
Yeah.
basically like say we were doing this on our own. So when it asks for the income statement, we just basically show the way that we got our net income, and that is the income statement.
Well, yeah, and now here's the thing is you want to do it in this form. I mean,
Yeah.
revenue minus expenses, but yeah, this is it. Yeah. So you should show something like this. Now, if you're doing this on notebook paper, just write a revenue, rent expense, net income. I used to do it by hand, but again, my writing is terrible. So
Are there gonna be like more factors that factor in? Like, so right here we have the rent expense and salary expenses. So like for different scenarios, are there gonna be different things that we have to like factor in, or those two gonna be the only ones that are there?
it could be, well, there could be a number of expenses. And if you look at a lot of companies, they may have hundreds of different expenses. Utilities, supplies expense, all kinds of expenses. The only other big one that we're going to cover, and this is, I'm going to jump ahead here. I think I got it done here. The only other thing that's going to get added in, and we'll do this next class, is the cost of goods sold. But again, that'll be for next class. We'll talk about that next class. But revenues, expenses, and costs basically are going to be in there. But for right now, revenues, expenses are the only things. Yeah, it's basically what comes in versus what goes out.
Right,
Okay.
Thank you.
And now, so there's retained earnings. So this is what's sitting in our piggy bank already. So the owners have a piggy bank, and they got $30,000 sitting in the piggy bank. Okay. So here's it's sort of like this. Here. So in the piggy bank. Okay, so here's a piggy bank. This is retained earnings. Okay, so here's the owner's piggy bank. Now, what goes into the piggy bank is the net income. Goes into the piggy bank. And the owners take money out of the piggy bank with dividends. So income goes into the piggy bank. Now, right now there's 30,000 sitting in the piggy bank, and we're going to add our income in. So whatever's in the piggy bank, income gets added to it. But then when they take money out of the piggy bank gets smaller because you've taken money out of it. You have to draw this on the test, and it has to be just as good as mine. So, look at the happy piggy. Look at that. Look, he's wearing glasses, just like me. All right. So so the piggy bank is money going into it. Now, getting back to our thing here. Okay, so we start out with our beginning. Retained earnings. $30,000. So this is beginning retained earnings, and what we're going to do is we're going to add in our income from over here. So we're gonna add in a net income. Now, the owners also took some money out of the place. And going back to the piggy example, what did they take out?
Dividends.
Yep. So we're gonna subtract out these cash dividends declared.
I just had a question, like for turning this in or for doing a test. Is it important that we write beginning retained earnings versus just retained earnings? Like, would we get marked off for that or anything?
No, as long as it's correct. I would say, just in general, I would get used to doing that though, putting the beginning and ending, and we'll get to it, and I'll show you why in a minute here. But which retained earnings we actually take is important, the beginning or the ending.
Can I ask a question?
Sure.
So how come we don't subtract the cash dividends declared before we like finish our net income, I guess? Like, how come that's not something that we'll take out before?
That's an excellent question, and here's why it's like that. It is like that because these expenses are what's necessary to run the business. And you don't have to pay the owners. It's not a necessary outflow of money, is paying the owners. So the owners cannot, let me think of the best way to say this. Interactions with the owners cannot change how the company's doing. It's a separate entity. So whatever income the business makes is completely separate from the owner. So the owners, whatever is paid out to the owners is separate from the income that the company actually made. And expenses are usually those things that are necessary to run the business, and dividends are not necessary to run the business. There's some companies don't pay dividends. So because of that, they're completely separate. But you bring up a very good point. They're both money going out. Expenses and dividends are both money going out. However, expenses are money is specific to the business to run the business for those things that are important to the business. And the dividends are not integral to running the business. So it is, those are interactions with the owners, not the actual what the entity actually made. So yeah, but that's a very good observation though, that they're both money going out. So you wonder, okay, well, here's money going out, here's money going out. Why aren't they the same? It's basically because it's an interaction with the owners, so we keep them separate.
So the things that are not necessary to run the company, those are the things that we take out last as far as our net income.
Yeah. Well, and two, it isn't that we're not reporting the dividends. We are, but they're just on a different financial statement. It's just not a financial statement only for the owners.
Okay.
Yeah. But no, but it's absolutely right. They both are money going out. Okay. And again, companies do not have to declare dividends, but if they do, then they have to pay them. Okay, so cash dividends declared. So this is money going out. And this will give us our ending retained earnings. Which is 52,200. 52,200. Okay, so this would be the ending amount sitting in the piggy bank. So, you know, in our piggy bank, you start out with 30,000. Added 4,600 minus the dividends. So that would be what would be left in our piggy bank. You know, the same idea. If this was started in there, the net income, and this is the dividends. By the way, now you see my writing, and now you, I'm sure, realize why I do it on the computer rather than writing it out. Okay. So that's our income statement and our statement of retained earnings. Moving on to our balance sheet, and this is where it's gonna be a little bit tricky. So at our balance sheet, we have assets, and assets are anything with a value. Okay. That makes it worse. Hey, there we go. Okay. So assets are anything with a value. We consider those assets. Okay, so let's come up here. There are two things that have a value to them. What are they? Looking at these accounts.
Can you say it again?
Equipment and stocks.
Close. I'll talk about that in a minute.
Equipment and cash.
Yeah, the cash. And okay, let me put it this way: if I was a bad person, I walked in a place and wanted to steal something, well, which items would I probably steal? I probably steal the cash and the equipment. Okay, I don't do that, by the way, but if I did, that's what I would do. Okay, so under assets, so this would be cash. $12,000. Okay. And equipment. So down here for our total assets, we have 60,000. Okay, we're gonna go a little bit over today for the class. But what time is it? No, we got 15 more minutes. What am I talking about? I mean, at 1:30, it's 1:45. Okay, so our total assets would be that. And so that's how much stuff we have. And by the way, assets are usually what you see in a company. If you look at Walmart, this is what you're going to see. Well, you're not going to see the cash, but you're going to see the equipment, the buildings, all that kind of stuff. This is what you're going to see if you look at most businesses. Okay, let's come back up here. And liabilities. Liabilities are things that are owed to other people. So we owe something to somebody else. we get a loan, we get a mortgage. Those are all things that are liabilities. Coming up here, oops, where am I at? Which thing on here probably is a liability?
Accounts payable.
Yep. Yeah, this is what a liability. And what we'll find out is that all payables are going to be liabilities. Oh, what is it? Okay. So accounts payable. And we only have one, so let's total that up, be 3,000. Okay, and our last section, yay, is the equity section. And we only have one account left. So what account?
Common stock?
Yep. Yeah, so common stock is the only thing we have left now. So this will be coming down here. We'll have common stock.
How will we know what else will be equity?
The other thing is going to be our retained earnings, which I'll get to in a second here. 4,800. Okay. So this is 4,800. Yeah, now this is where I'm gonna try getting you on the same page. Should go fitter now, but yeah, you fit kind of. A lot of extra space in here. Okay, so this is where it gets a little bit tricky in that we're gonna have our ending retained earnings. Uh, 52,200. So this is where it needs to be the ending retained earnings in here. I didn't make that very well. But anyway, so retained earnings from the same retained earnings. This is the owner's piggy bank. It's put down here with the owners, and so this will be the total equity. And equity is the owners. I didn't put that in, and I should have. So the common stock was stock that the company sold to the owners. The owners gave them $4,800. You know, could have been 50 years ago, but the owners gave $4,800. The piggy bank has 52,000. So the total equity is that. Now you'll notice something. If you add up the total liabilities and the total equity, it comes out to, oops,
It equals the total assets?
Yeah, these two, you'll notice that they equal. And you say, well, that's great, but what does it mean? You know, why, what's the significance of it? And here's the significance of it, is that you have these assets. You have 60,000 worth of assets. Those don't just come from anywhere. They have to come from something or someone, right? There has to be some way that you got those assets. The balance sheet explains it. It says, okay, these are all the assets we have. How did we get it? We borrowed 3,000. So 3,000 was borrowed from somebody else. And the owners kicked in 57,000. So that's how we got these assets. So it explains how we got the assets. So the balance sheet explains how we got these assets. We have 60,000 of assets. We have, how do we get them? We borrowed 3,000 and the owners kicked in 57,000. That's how we got the 60,000 worth of assets. So it explains where these assets came from. And
So will those two always be equal? Sorry, I didn't mean to interrupt, but like those should always balance out.
yes. And I'll tell you the biggest mistake that's made is that people will use the beginning retained earnings instead of the ending. So the ending retained earnings is actually very important. And that this is what you'll end up with down here is the ending ones. So if you do this, you know, you're doing the test and it doesn't balance, you go, oh, this is, you know, I know it's supposed to balance, it doesn't. Check the retained earnings. The retained earnings are the most common ones that are missed. Usually people put the beginning, if they do miss it, they'll usually put the beginning retained earnings in. Question on that? Okay. Well, I think what we'll do is I think I'll give you guys number 4 to do on your own. I want to talk about one thing on here. Most of the stuff is the same. It's in a little bit different order, but it's the same. You guys know where expenses go where? Which statement?
Income.
Income. Right. So expenses go on the income statement. The only new account really here is accounts receivable. And this is money that is owed to the company. So someone owes us money, basically, accounts receivable. What kind of an account do you think that is? Someone owes us money. They're gonna have to pay us money, and they're gonna end up paying us cash.
That's an
Equity?
asset.
Yep. Yeah, it's not cash yet, but it will be. So accounts receivable is gonna be an asset. So I'll let you guys do this one on your own, and I think next class we'll go over it. I think we'll call it a day. Now, we're not gonna turn this in yet, because we're gonna wait until we're done with it. We got number 4 and number 6 to do. So I will leave you guys with this as homework for next class.
Are your lectures, can we go back to them later since they're recorded?
Yes, absolutely. You can go back to the lectures that we recorded. Now, they won't be up for a little while because it takes some delays in getting on YouTube. But probably later on today they'll be up, but certainly by tomorrow they'll be up.
All right.
Yeah. So it's yeah.
I forgot, this isn't like, we don't have class tomorrow. It's the Tuesdays and Thursdays.
Right. So Thursday. So this is for Thursday. but yeah, the lectures will be up. These ones will be a little bit, will probably get up a little sooner just because they're shorter classes than the other ones. But yeah, I'll get it up as soon as I can. And again, from my end, the editing is not really the problem. The problem is the getting it to load onto YouTube. But yeah, so it should be up. I'll tell you what, I'll send out an email when it's up. When it's ready. Okay. Yeah.
So we're just doing this for Thursday, like on our own, and then we're gonna go over it, you said? We're not like.
Yeah.
submitting anything?
Yeah, you do not need to submit it yet, and we're gonna do problem number 6 also, so. So, yeah, so we're also gonna do number 6. And then we'll turn this in. And the next class we'll start in on the practice exam. We might finish the practice exam. If we finish the practice exam, then you guys will have I'll send out the first exam on it. And this is kind of basically the way that it's gonna go. It's gonna go, well, actually, we'll probably do, I think I'm lying to you. We'll probably do a problem or two out of the textbook. And again, some of the stuff we do in class I'll have with me, but any form of the textbook you want to get is fine. It's for this class anyways. And again, the only caveat is that the textbooks can be used in accounting 211. So if you have an instructor on 211, they might rely on it more. And if they do, then you have to get the access code for that class. But anyway, so yeah, we'll continue with this next class though. And just so you know, we're going to go a little bit slower on the first few chapters because especially chapters 1 through 4, 1 through, well, 1, 2, 3, 4. If you don't get those, the rest of it doesn't make sense. So we're going to go a little bit slower on the earlier chapters, and then later on it'll go a little bit faster for everybody because if we have a good base, then we can usually things go faster. So anyway, yeah. So Stevie, you work out number 4. If you're having difficulty with it, don't panic. We're going to go over it. We'll have it take any questions on it. If it's unusual, if you feel frustrated because it should, this is probably the first time you've done them, right? Financial statements. So if it feels a little unfamiliar, it should feel unfamiliar. So don't worry too much about it.
Excuse me?
Yeah.
So we're just doing number 4. We're not doing number 6.
We're gonna do number 6 next class.
Okay, so for homework, it's just number 4.
Correct.
Yep. Right, thank you.
Yep. And we're gonna go over both of those, but yeah, but number 4 I want you to try on your own. Just get kind of used to doing it.
Yeah, you said number 4 homework, but it's pretty much just to do on our own, not to submit.
Correct. Exactly.
Okay, thanks.
Okay, question is, how do I keep track of attendance? I actually, actually, not YouTube, Zoom actually records who attends. But just so you know, really the classes are here for you, and that because you will see the recording. It is possible to miss a class. If you have to miss a class for some reason, you don't have to tell me. I would strongly encourage you to attend the classes just because people generally do better when they do. But I don't keep track of attendance as far as you have to tune in. Because I mean, I know what happens in these Zoom meetings. If you put that in there, people tune in and then they go play video games or something. So anyway, the meetings are recorded, and again, usually they're better if you do attend. The attendance is recorded by Zoom. I don't usually use that for any grade purposes, but everything comes usually from what you turn in. And I also encourage you to tune in just because it usually keeps people on track. People don't tune in, they generally get off track, and then it's you're 2 weeks out or whatever, and the stuff they're covering doesn't make any sense. So anyway, but no, I don't keep track of attendance on for a grade. question on that? Okay, well, I will see you guys on Thursday at 12:30, and again, give page 4 or problem number 4 a try. If it doesn't balance, don't panic. It's probably something simple. So and we'll go over it. Okay. All right, guys. Well, I will see you in 2 days' time.
I have a question. Can I ask you after class?
Yeah. Yep. Sure.
Thank you.
Thanks, guys.
Have a good day.
Thank you. Have a nice day.
Sure.
Thank you.
Thanks.
Professor, I'd also like to make a comment as well. It'd be really quick. I just wanted to say, since this is like an introductory class, I think it would be helpful if when we went through the different vocabulary words, like we defined them so that students would know what each word means, because I know that some people may not know what a dividend is or a stock is, or what accounts payable may mean. So like, just for the future, if possible, if we could define those terms.
Yeah, absolutely. Yeah, and this is part of the problem with this class, is that it is such a foreign, language, if you will, about those. Yeah, I have no problem. As a matter of fact, for next class, I think I'll type something up that'll have those on there.
Okay, thank you so much. I appreciate it.
No problem, no problem. It's a good idea.
All right, have a great day. Bye-bye.
Bye.
I just wanted to talk about a few things. So the book, I don't mind spending the money for the book, but I just wanted to make sure, did you tell the school, like, you know how you have to send the school what book you want? Did you tell them which one?
They tell me.
Oh, they tell you?
Yeah, it's not like that. Yeah, so the textbook is the same. It's one in the bookstore, the 15th edition of the Cengage book.
Okay.
And again, there's different versions of it out there. You can get it through the bookstore. The big thing is you need the code if you're going to do.
I was going to get the physical. I don't like that online. I need to physically see it and read it.
And this book's been out for a couple of years, so you can probably get it fairly cheap. I'll put it this way: you can get it cheaper than definitely than the bookstore.
Yeah, because they're talking about 200, so I'll look around for that one.
Yeah. There's places that have the. They also basically sell the PDF version of it. There's a place called a website called C Textbook, I think. I think they sell PDF versions of it, but definitely look around for it. Again, it's been out for a couple of years, so I would. And there is, I think there's a newer edition of it out. So you definitely can use that in this class. And again, the only warning I'll give you is that if you go into accounting 211, they may require you to have the code.
Okay.
So I don't want to tell you that you're not going to have it, because you may have to have it in the next class.
All right, that's not too bad. Other than that, I mean, for like classes and grading, or just like homework, right? It's gonna be every week or something like that.
Yeah. Whenever we finish up something, that's when it gets turned in.
Okay. And Blackboard is gonna tell me like the due dates.
Yeah, it'll be posted in Blackboard, and it's usually posted. It gets posted. I usually give a week. So, for instance, we're going to finish the chapter 1 handout next class on Thursday.
Mm-hmm.
So the due date will be the following Thursday.
So I would go on handouts, and then
it would actually, there's actually not. It's not in there now. It would be in there submit. We'll go over it next class.
Okay, thank you.
Yeah. Questions? Okay, well, have a good day.